My name is Zima Finance, and I'm going to say this clean, direct, and without sugarcoating. So in this 7 minutes video, I will tell you why Bitcoin price is falling. So watch to the end, so you do not kiss anything. Ha ha ha! Sorry, I mean miss anything. So let continue. Bitcoin's recent price decline is not random, it is not mysterious, and it is not unprecedented. It aligns with historical cycle behavior, and it aligns with current global liquidity conditions. This analysis explains why the decline is happening, why it may continue, and how today's market structure compares with previous Bitcoin cycles. A written version of this outlook appeared in the Crypto Macro Risk Memo published on January 15th, when Bitcoin was trading near 97,000. That report is available at benjamincow.com under the Reports section, and it can be read online or downloaded as a PDF. Before we get deeper, let's remember something Albert Einstein said. Compound interest is the eighth wonder of the world. He who understands it, earns it. He who doesn't, pays it. In crypto, that truth is sharper than ever. Volatility can destroy gains faster than any bear market, and it can magnify losses beyond what simple charts show. Now, here is the part people don't like to hear. Bitcoin is currently in a bear market. Not maybe, not temporarily, not just a dip, a bear market. The primary basis for this conclusion is cycle duration. The fifth Bitcoin cycle peaked in October 2025, approximately 1,062 days after the prior cycle low. The previous cycle lasted about 1,059 days. The cycle before that lasted roughly 1,068 days. Different years, different narratives, nearly identical timing. That is not coincidence. Historically, Bitcoin has topped in the fourth quarter of the post-halving or post-election year. Q4 2013, Q4 2017, Q4 2021, Q4 2025. Every single one of those peaks was followed by a bear market. No exceptions. From this perspective, the current decline fits the established historical pattern. The cycle has ended. Bitcoin has transitioned from bull market to bear market. Some people expected this cycle to stretch longer because many altcoins never had a strong rally. That expectation is irrelevant. Bitcoin does not extend the bull market because altcoins are underperforming. Bitcoin does not care about your favorite token. Another source of confusion is that several popular cycle top indicators did not trigger. For example, the Pi cycle top indicator did not signal a top. That same thing happened in 2019, and 2019 is an important comparison because 2019 is the only prior instance where Bitcoin topped during apathy rather than euphoria. In euphoric tops, price peaks after massive retail participation and aggressive speculation. In apathetic tops, price peaks quietly. No frenzy, no mania, no public obsession, just a high followed by a slow bleed. In 2019, Bitcoin topped without a major rotation into altcoins and without widespread retail excitement. That same structure exists today. When Bitcoin tops during apathy, selling pressure is driven by time-based capitulation, not panic. People don't all dump at once. They slowly reduce exposure, week after week, month after month. This produces lower highs, followed by lower lows, and a prolonged, steady decline. That is exactly what current price action resembles. Bitcoin has attempted relief rallies. It has failed to establish higher highs, and it has continued trending lower. This does not contradict the 4-year cycle model. It adds a monetary policy layer on top of it. In 2019, Bitcoin topped a few months before the Federal Reserve's balance sheet began expanding. The same sequence has occurred in the current cycle. When Bitcoin is compared with total assets held by the Federal Reserve and with broader global liquidity measures, similar relationships appear. Global net liquidity, defined as the combined balance sheets of the Federal Reserve, Bank of Japan, People's Bank of China, Bank of England, and European Central Bank, minus reverse repos and the Treasury General Account, provides a more direct measure of liquidity conditions than M2. Bitcoin has historically topped before M2 peaks. Global net liquidity has shown a closer relationship with major Bitcoin turning points. Right now, global net liquidity remains depressed following an extended decline. During similar conditions in 2019, U.S. equities continued rising while Bitcoin weakened. That environment can be described as risk-on without excess liquidity. Here is the uncomfortable truth. In risk-on environments with abundant liquidity, crypto performs well. In risk-on environments without excess liquidity, equities can rise while crypto falls. That is the configuration currently in place. As long as global liquidity remains constrained and equities continue showing strength, Bitcoin is likely to underperform stocks and remain under downward pressure. Another common belief is that money will rotate from metals into crypto once gold and silver peak. Historically, this has not produced immediate support for Bitcoin. When gold declines by modest percentages, Bitcoin has often declined by several multiples of that move. Translation: If gold drops 5%, Bitcoin doesn't drop 5%. Bitcoin drops a lot more. Positioning in crypto in anticipation of a metals-driven rotation has not been a reliable strategy. Another recurring historical behavior is Bitcoin's tendency to revisit its 200-week moving average during bear markets. Roughly every few years, price checks this level. Similar interaction would be consistent with prior cycles. From a duration standpoint, most Bitcoin bear markets have lasted around 1 year. The 2018 bear market ran from December 2017 to December 2018. The 2022 bear market ran from November 2021 to November 2022. If the current bear market began in October 2025, a one-year duration implies a potential low around October 2026. This time frame also aligns with prior behavior in MicroStrategy. After its February 2021 peak, MicroStrategy required approximately 98 weeks to reach a bottom. 98 weeks from that peak corresponds closely with October 2026. Different data sets, different instruments, same window. These independent observations point to the same conclusion. Bitcoin appears to be in a bear market that began in October 2025 and may persist for roughly 1 year. Albert Einstein also said, "Not everything that counts can be counted, and not everything that can be counted counts." Bitcoin price alone does not measure the real value or the risk in the market. And he once added with a hint of humor, "The hardest thing in the world to understand is the income tax." Think of that when regulators and policies suddenly affect Bitcoin prices. This decline is not the result of a single event. It reflects historical cycle timing, apathetic topping behavior, and constrained global liquidity. And I'm going to say this plainly. If you are waiting for a macro catalyst to invalidate all of that, you're gambling. If you are pretending every drop is the last shakeout, you're lying to yourself. Markets don't move on hope. They move on structure. Right now, the structure says bear market. A more detailed written analysis is available in the Crypto Macro Risk Memo at benjamincow.com under the reports section. Additional coverage is available through Into the Cryptoverse Premium at intothecryptoverse.com. I'm Zima Finance. That's the reality. Do with it what you will.